Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Eklavya Saraf. He is the Global Head of SPAC at Nasdaq, and we're going to learn more about a SPAC. And Nasdaq is the home to this particular type of way to access the capital markets. Eklavya, it's great to have you with us on Trade Talks. Thanks so much for joining us. Tell us exactly what a SPAC is.
Thanks so much for having me, Jill, and hope you're doing well.
Thank you.
So a SPAC is a special purpose acquisition company, and it is formed to raise capital through an IPO. The goal is to bring an existing company public through the SPAC acquisition. And SPACs typically have 24 months to find a target. The money raised through the SPAC is held in the trust account. So many investors think of this really as an alternative to investing in T-bills, with the upside being that the warrants that the investors receive. And as an investment instrument, SPACs have grown very popular in recent years. SPAC IPOs have raised over $10 billion each year since 2017 and had a record year in the last year. In 2019 on Nasdaq, we listed 43 SPACs, Jill, and they raised a total of $8.3 billion. And now what's interesting is that the broader investor base is getting comfortable with this product and seeking a return profile that can materially outperform short-term treasuries, while at the same time retaining that principal protection of the SPAC's shareholders redemption mechanism. And PE firms are also embracing the SPAC and serving as sponsors and using them as a vehicle for portfolio companies.
Why are SPACs still attractive in light of the IPO and market environment?
Yeah, so the time frame that allows a SPAC to identify and complete the acquisition make it a lot more resilient to the short-term market volatility, especially what you're seeing today. And so the market is also tracking the ability for current SPACs to complete their business combinations. And we're continuing to hear that finding that right deal is competitive as multiple SPACs are competing for the same potential target. Companies of quality can get out in up and down markets, and a lot of that has to do with the quality of the management team and their track record. And what we've seen over the last few years is just the quality of the sponsors become more dynamic with private equity and venture capital entering the space from an investment standpoint that can make a deal appealing given their track records. So DraftKings is a truly unique company. It is the only vertically integrated pure play sports betting and online gaming company based in the US. Nasdaq is certainly very proud to become the listings venue of this disruptor in the digital sports and entertainment and gaming space.
All right, now how are SPAC IPOs different than traditional IPOs and other ways of raising capital?
So SPACs are certainly an alternative way to go public. A SPAC can offer a business essentially a faster IPO with guidance from an experienced partner. And factors that differentiate a SPAC IPO from a traditional IPO include the suitability of the company for the public markets, the economics for the seller, and certainly the execution risk. The idea again, is to give these companies the benefits of being a publicly traded company. And one of those central themes is easier access to capital.
How does Nasdaq support SPACs and other business combinations?
Thanks for asking that. So at Nasdaq, we're always evaluating ways to support companies going public. And since 2010, 81% of SPACs have listed on Nasdaq, raising over $31.6 billion. And SPACs listing on Nasdaq Global or Global Select do receive our industry-leading IR services to help them support with these newly public companies as they navigate and identifying the investors they should meet with and target. And Nasdaq is also offering unique marketing and visibility assets that help elevate brand awareness from that first day of the SPAC listing through the completion of the business combination and to being a life as a public company.
All right, Eklavya, thanks so much for joining us on Trade Talks.
Thank you, Joe.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.